Guys, I was wrong again, and I'm sorry. I've brought a bad name to personal finance and investing YouTubers the world over. Because on May 22nd, I released a flurry of analysis videos on AMD, and in the financial breakdown video, I mentioned this. In my own, feels good considering everything else going on number, I felt confident with a price target of about $100 for the coming quarters, but it really wouldn't surprise me if we see it going up to like 120. Y'all know they just dropped their earnings report a couple days ago, and wait, Charles, what did you say the stock price was at?
Looks like we hit 102.95.
Dude, crap, that means we're gonna have to change the thumbnail and title again. Frack. Well, looks like things are going in the right direction after all, with AMD's big earnings report. But what's next for the stock after these big moves? In this quick video, I wanted to do a bird's eye view of the earnings and then dig in a bit to a few of the things we should be considering for the stock going forward. If you're new to the channel, welcome. My name is Trey McKee, and this is Benevolent Investors, where we aim to grow our stock and crypto investments wisely to turn around and plow those profits back into investing in our communities and those around us to change the world. On the backs of a decent 2020 for AMD, we're seeing 2021 turn out to be a beast so far. As far as the stock price goes, we've been seeing the price kind of bounce up and down in this channel between $74 and like 98-ish bucks, where we did see strong resistance until today. Take a look back at July 2020, where we saw the share price boom like 50% over a 2-week period. The stock's been kind of weird because it's like really volatile within like a specific range, and it doesn't tend to often stay, beaten down for a long time or overhyped for a very long time. It just kind of is like erratically flying within this range. But on the back of these successive quarterly victories that we've been seeing recently, I wouldn't be surprised if we started to see another like July 2020 like boom in the share price, bringing us up into a new level of the stratosphere sometime soon. I also wouldn't be surprised if we see things settle down a bit again, because the way this thing has moved historically either. For the record, I'm typically the kind of investor that gets into a stock for like 6+ months, if not a few years. Though AMD has paid off quite nicely with like 30% plus gains for me so far in like a very relatively short period of time, I still feel comfortable holding the stock going forward, like for at least, another half year, if not more. So getting into the specifics of the earnings report super quickly, revenues are up 99% year over year from 1.9 billion to 3.8 billion. Quarter over quarter, they're up a respectable 12%. Keep in mind that with a market cap of about 118 billion, while AMD is much smaller than their competitors like Intel, which is at like 215, and Nvidia, which is at 486, a quarter over quarter growth of 12% is fantastic, and year over year growth of 99% is phenomenal. We'll get into a bit more of why AMD is doing this in a minute. So back to the earnings report, gross profits are up 116% year over year from 848 million to 1.8 billion, and up 15% quarter over quarter as well. They also locked in a growing gross margin too. They're up 2% quarter over quarter and 4% year over year, which is just what you want to be seeing for a company that you own. Though operating expenses were up as well, they weren't up as dramatically as the profits were, leading to a net income that's up 352% year over year and 28% quarter over quarter. This quarter last year, they hit 157 million in net income, but this quarter they hit 710 million. So EPS was also up 346% year over year from 13 cents to 58 cents. Lisa Su, the hyper-capable CEO of AMD, I think it previously mentioned that they were expecting an annual revenue growth of like 50% for 2021, but now she's bumped that up to about 60%. This HyperChart gives us a quick depiction of their cash situation as well, showing that they're being wise about stacking up fat mountains of cash while the getting is good. Their cash and cash equivalents are now sitting at a cool 3.79 billion. This HyperChart shows us how they're using some of those gains to plow funding back into R&D, shown here in the red, which trends up each quarter. AMD's also shown consistently that they're able to pull in top-tier return on invested income, or ROIC. So it seems they've gotten a great balance of reinvesting along with, stock price growth, share price growth. Speaking of investor return, don't forget about the $4 billion share buyback they just announced a couple of months back, which will be entirely cash funded and roll out over an unspecified period of time. Sharebacks have a bit of a controversial history, but in this case, as a shareholder, Seeing that management, who's always looking to invest their money smartly, is choosing to invest cash in buying AMD stocks, just like I am, is really reassuring. They mentioned that in the second quarter, they completed $256 million of buybacks for 3.2 million shares. So there's still a long way to go for these buybacks in the coming quarters. And these buybacks, I think, will continue to provide upward pressure on the stock price in the coming quarters. And finally, free cash flow, where the rubber hits the road for investors, was record-breaking this quarter for AMD at $888 million compared to $152 million a year ago. So now that we have a good idea of some of the numbers, let's take a look at some of the bigger headlines for AMD. Why are they growing so well, and what strategies are on the docket for the coming quarters? Can we expect to see growing market domination leading us to growing shareholder gains? Or should we cut and run with the profits we've already made? Now I'm going to dig into 3 points. And I could make entire videos on all of these, I think, but I'm going to keep them brief just for the sake of keeping the video compact for you guys. Number one, the Xilinx acquisition. If you don't know what this is, basically AMD's been looking at buying Xilinx, which is one of, if not the market leader in adaptive computing. FPGA, or field programmable gate arrays, are their specialty. Simply put, FPGAs are neat because they allow you to upgrade the performance of systems often used in data centers in a customizable and needs-based way on the field. So you don't have to like go and buy a whole new system if you feel like, your system's getting a little bit slow. You just add FPGAs. So AMD's been trying to get this deal through on an all-stock basis, which means it would cost them no cash to complete. And last I checked, Xilinx's market cap was about $34 billion. And the deal would end up being immediately accretive to AMD, meaning that as soon as the deal goes through, profits start rolling in for AMD. And this doesn't include any of the synergistic benefits on the horizon that will, be birthed out of this new merger. Shareholders overwhelmingly approved of the acquisition, and the deal should be sealed by the year's end. And in the most recent earnings from a couple of days ago from Xilinx, EPS was 83 cents per share, up from 65 cents per share a year ago, despite the worldwide chip shortage. The gains were thanks in particular to data centers and wireless, and this is all like fantastic news for AMD. Number two, data centers, which is becoming a larger and more significant part of AMD's portfolio. And it's significant because Intel has been like really dominant in that space for a long time. NVIDIA continues to be very dominant, but AMD is just completely jacking market share from Intel right now. But AMD EPYC data center processors power half of the 58 new systems added to the list of the world's top 500 fastest supercomputers in the recent weeks. Some of the examples they shared were Microsoft Azure supercomputers in the UK, as well as the Singapore National Supercomputer Center's System 2. Google Cloud, using third-generation EPYC processors, also mentioned that they're getting 40% higher price performance and 56% better absolute performance for scale-out workloads compared to other cloud instances. When you have some of the world's biggest companies demanding your hardware like this, it's a really good sign for things to come. And number three, access to various new markets. In the past, I've mentioned how AMD powers both the Xbox Series X and the PS5, but more recently, they've also announced partnerships to power Tesla's Model S and X's infotainment/gaming system as well. And just recently, they also announced Steam's new Steam Deck handheld system, which is basically a computer in the shape of like a Nintendo Switch. And it's garnering a lot of attention, and maybe Steam's first major success in gaming consoles as well. And so the brains behind the Steam Deck are brought to you by AMD. And so with a lot of growth potential on the horizon, especially in AMD's stronger business segments, I think there's a good reason to hold on to AMD for even longer going forward. I think if you're still considering the stock, it's still going to be growing, and it's still not a bad time to get in. I haven't looked into the numbers too deeply as far as putting together a discounted cash flow model yet, but some of the analyst expectations I'm seeing range from like 110 to as high as 160 kind of in the coming months and quarters. If you're thinking about holding on to the stock for the long term, it's really important to kind of get a grasp of how the Xilinx acquisition is going to be boosting AMD going forward. So click on this video right here. Love you guys, and don't forget to stay generous.